Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about GARRETT Motion INC quarterly report. GARRETT Motion Inc. provides a wide range of businesses and services, including design and manufacturing of turbocharging technologies, air and fluid compression systems, high-speed electric motor technologies, mechanical and electrical products for internal combustion engines, compressing air for fuel cell compressors, compressing refrigerant for electric cooling compressors, aftermarket sales through distributors. These services cater to various industries, including the mobility and industrial space, with a focus on original equipment manufacturers and international markets. GARRETT Motion Inc.'s stock price has skyrocketed by 64.84% in the past year due to a combination of strong financial performance and strategic developments. The company's third-quarter earnings exceeded analyst expectations, with revenue reaching $902 million and adjusted earnings of $0.38 per share. GARRETT Motion also raised its full-year 2025 outlook, projecting significant growth in revenue and adjusted EBIT. Additionally, the company demonstrated a disciplined approach to capital allocation by repaying debt and buying back shares. Improved profitability and cash flow were also evident, with an expansion of the adjusted EBIT margin to 14.7% and generation of $107 million in adjusted free cash flow. Furthermore, GARRETT Motion secured several new business wins, including awards for plug-in hybrids and range-extended electric vehicles, and received positive analyst coverage and ratings upgrades from BWS Financial, Fitch Ratings, Stifel, and BNP Paribas Exane. These factors have collectively contributed to the significant increase in GARRETT Motion's stock price over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth. The main contributors to revenue growth are organic growth, acquisitions, and the electrification of customers' products. Additionally, compliance with emissions standards and overall greenhouse gas reduction targets have also driven revenue growth. Furthermore, favorable foreign exchange environments, new application launches, and program ramp-ups in various regions have contributed to increased sales. Revenue decline, on the other hand, currency fluctuations, industry trends, and unfavorable product mix have led to revenue decline. Specifically, softer demand for off-highway replacement parts in North America and passenger vehicles transitioning to gasoline hybrids in Europe have resulted in decreased sales. Net income and profit margins. A mixed picture. The financial summary reveals a mixed picture of net income and profit margins for the company. On one hand, net income decreased by 32% from $77 million in 2024 to $52 million in 2025, page 3. However, this decline was followed by an increase of 24% from $182 million in 2024 to $226 million in 2025, page 7. Profit margins also showed a mixed trend. Gross profit margin decreased by 0.5 percentage points from 20.6% in 2024 to 20.1% in 2025, page 3, while operating profit margin decreased by 2.1 percentage points from 11.3% in 2024 to 9.2% in 2025, page 3. However, net income margin showed an increase from 6.3% in 2024 to 8.6% in Q3 2025 and 8.4% in YTD 2025, page 36. The reasons for these changes are varied, including increases in foreign exchange translation adjustment and effective cash flow hedges, as well as productivity and cost savings, higher sales volumes, and favorable foreign exchange impacts. Overall, the company's net income and profit margins have shown a mixed trend, with both decreases and increases observed. The reasons for these changes are complex and multifaceted, reflecting various factors such as foreign exchange rates, commodity prices, and operational efficiencies. Based on the provided financial summary, it is clear that the company is indeed generating positive operating cash flow. The key indicators of this are: operating income has increased from $52 million in 2024 to $77 million in 2025 for the 3 months ended September 30. Net income has also seen a significant increase from $52 million in 2024 to $77 million in 2025 for the same period. Similarly, for the 9 months ended September 30, operating income and net income have both increased from $182 million in 2024 to $226 million in 2025. These increases demonstrate that the company is generating a substantial amount of cash from its operations, indicating positive operating cash flow. The company's debt level or interest expenses have undergone significant changes. Notably, interest expense has decreased by $8 million in the 3-month period and $47 million in the 9-month period from 2024 to 2025. Additionally, net cash used for financing activities has decreased by $252 million over the same period. However, cash interest paid has increased by 16% during this time. These changes indicate a reduction in financial obligations, suggesting that the company is managing its debt more effectively. Regional performance review. The financial performance of the company varied across different segments and regions in the recent period. Notably, Europe emerged as a standout performer with a significant revenue increase of 15.6%. This growth was also observed in Asia, where revenue rose by 4.8%. On the other hand, the United States segment struggled, recording a decline in revenue of 4.5%. This underperformance in the U.S. market contrasts with the strong growth seen in Europe and Asia, highlighting regional disparities in the company's financial performance. Management is optimistic about the company's outlook, citing several key strategies for growth. The company plans to invest in facilities to expand manufacturing capacity, particularly for new product launches. This investment is part of a broader business strategy focused on turbocharger and electric vehicle markets, where significant opportunities are expected. Additionally, management is prioritizing initiatives to improve productivity and efficiency, ensuring adequate liquidity through a combination of cash flows, term loan borrowings, and debt. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In recent years, it has paid out significant amounts in dividends, with $36 million distributed in 2025. Additionally, the company has also been actively repurchasing its own shares, spending $136 million on common stock during the 9 months ended September 30, 2025. Concerns about inventory buildup emerge. Our financial summary reveals a growing concern regarding inventory buildup. Between December 31, 2024 and September 30, 2025, our inventory levels surged by $33 million. This increase is comprised of a $23 million rise in raw materials inventory and a $10 million jump in finished products inventory. These figures suggest that we may be accumulating excess stock, which could lead to supply chain disruptions if not managed effectively. That concludes the financial summary for GARRETT Motion INC. Feel free to comment below, and I will be happy to answer them when possible.